right. Well, hello, everybody. For those who do not know or have not met me yet, my name is Isaiah Garcia, and I am joined along here today with Brennan, my co-founder, as well as Colin Carvey, one of our advisors. I will let Brennan introduce himself, and then we'll introduce Colin, who we're very excited to have on today's podcast. But yeah, let's get right into it.
Hey, I'm Brennan Burke. I'm one of the co-founders with Isaiah of Develop and DReDAO, blockchain startup focusing on decentralized governance and fractionalizing the way we interact with real-world assets. So really excited to have Colin here, who's a veteran in the real estate industry and short-term rentals. So Colin, why don't you introduce yourself?
No, thank you both. You both are very kind. My background, just to give people perspective, was in financial services for many years. To age myself, I'm not going to put out the number, but a long time. And then did a stint at Vacasa, helping grow that into the behemoth it became. And then am now CEO and founder of Revity, very much focused on the short-term rental space and the real estate sector, really trying to help people understand investment class that short-term rentals have become.
Yeah, very nice. Just give some people a little bit of perspective. How many mergers and acquisitions have you been a part of?
Funny. So at Vacasa 88, evaluated
Nice.
about 2,200. So looked at a significant number and acquired in the end 88. That was in a 2-year time period, so a very short time period. Had an amazing team over there, and we looked at a lot of stuff. We've done some since, even in my current company, Revity. We've helped a few acquisitions happen.
Awesome. I did want to touch on that. So I was doing a little bit of research prior to heading this conversation, and I saw that Revity was based on the French word rêver, which meaning dream. So sort of how did you come up with the idea of Revity, and where does the name originate from?
That's a funny question. So I wanted something that sounded sophisticated because I thought that would help from the investment perspective. And I thought foreign words were sophisticated. So it was actually me and my wife talking about, okay, how do we name this company? I'm trying to figure it out. And she started asking me questions like, what is the idea here? And I'm a big believer in democratizing this space. I think, from an asset perspective, it's a great democratized asset. Like common people can actually own a second home. And most people don't realize that. They dream about it. And that was really the premise of it. Is the dream is super important for me, that vision, the exploratory piece of that, of what dream means, right? And that it's actually achievable, which in the end, DY is day. So it's really daydream. Like it's something you can dream of in reality and have in reality. And that was the foundation for the name itself, was really all about daydreaming. It's actually something that you can realize, because the space is achievable. It really is. And especially with things like what you guys are doing and some of the other players out there that are really trying to create this asset available for multiple people, because it's something you can enjoy. It's not just something you can earn on. And that's pretty unique, and especially for a real estate asset.
Yeah, no, definitely interesting. And thank you for that. So I did want to touch a little bit. You said dream, and this is steering a little bit away from, creating this company as a dream and your own idea, seeing it fruition. But growing up, Colin, did you have any dreams, or what were your dreams growing up as a kid? And did you achieve those dreams, or are you living your dream, or do you mind to give us a little of color there?
Yeah. I grew up in a very creative family. My mom is an amazing artist, and also a very intellectual family. My dad was a mathematician, and an artist. My siblings were both very smart. I was very much into sports and activities, but also liked some of the creative components of it. I ended up becoming a banker, and my brother, who graduated at 16 and very intellectual, he's a traveling artist. I would call it a starving artist. He lives in Thailand right now, travels all over the place. He has a blast. But I always dreamed that I was going to be a graphic artist, which I did, by the way. I always dreamed that I might get into I'll call it FBI, PI work, that kind of investigative work. I did that for a while. I did in financial services, so ran fraud analytics groups and built out fraud products at TransUnion, for example. So I would say that was that piece of it. But I also wanted to I really enjoyed real estate and exploring what that had, and just felt that there was a ton of opportunities. So now I'm doing that. So I'm one of those folks that I think is a little lucky, but also spent a lot of time trying to make those dreams come true. So I definitely, I always had this thing of combining the math with the art. And I would say a lot of people think that real estate is all math. There's a heck of a lot of intuition and art that I think goes along with it, that I think is important. So.
Yeah, no, definitely. That's super interesting. It's cool to learn a little bit more about people in their own unique perspective. But I did want to touch on something that you had brought up previously, how you said it was you and your wife sort of came together with coming up with a name for Revity. At what point in your life did you realize that real estate was something that you wanted to pursue? Was there like a pivotal moment where you were like, oh, you know what? Maybe this is something I really want to get after. It has always been on the back burner. And after all your different, career paths and changes and different responsibilities and stuff like that, that led to, you know what, I want to be a CEO, start my own company and do something on my own rather than being someone else's employee.
I think it started when I was a little kid. My parents had bought a house, like their first house. And by the way, there's 4 of us kids. So I have 3 siblings. So bless my mom and dad's heart for putting up with that. But we grew up, we didn't have a lot, but they figured out how to buy a house. And they ended up selling that house and be able to buy something really nice. And they bought like downtown and like just by luck of the draw, right, had gotten this really good house in a great location that they were able to produce some revenue off of and get us into an amazing neighborhood where I grew up. And that neighborhood, like I love sports. I still love sports to this day. And we, every night, all us kids, and we happened to have the house that was in the center with the street light right there on the street. So every night it was at our house, in front of our house, the baseball game, the tag game, the hide and go seek game, because the telephone light. But that was enabled because of real estate, and just some of the bets I think my dad and mom made and how they were able to enter it in with their first house and get us into a really cool neighborhood. So I think that kind of started it because I saw what it could do. And then I went into my creative graphic artist space for a while and didn't think about real estate. And then I ended up doing the same thing with my first house in Salinas, California, believe it or not. Bought a house there, small 3-bedroom, 2-bath starter home. We did a ton of work on it. I like to do a lot of work. I like to get my hands dirty. And so did that with that house, fixed it up, added a bunch of stuff, had fun doing it, and then was able to sell that. And then I moved up to Portland and took that money and was able to buy something even nicer. So I've just seen the benefits that real estate can provide as an asset class. So.
Nice. Awesome. Well, I do want to touch one more question, and then we'll dive a little bit more into the real estate specificities. But you had mentioned that, and it seems to me that you obviously, well, not obviously, but your parents might have been big drivers and motivators to push you to who you are today. Was there anything that maybe that your mom, because they're both intellectuals, and was there anything that your mom maybe rubbed off on you or that like changed you to who you are today? And there's something that your dad may have gave you advice in a certain direction, or you maybe like take a piece of both and then made you who you are?
Oh, I owe them just about everything about who I am, right? Obviously a ton of experiences throughout that, but my mom is very much an artist. And she will acknowledge that money is not her thing. And math is probably not her thing. If she still has checks in the checkbook, she thinks there's still money in the bank. So that's my mom, but very thoughtful, very caring person, and brings a ton of joy to anybody she ever touches. And that's something that I have always longed to do and continue long to do, is be as good as my mom, right? She's amazing. My dad is the mathematician. He understands numbers and finances very well and pounded into me day after day that just because there's checks in the checkbook does not mean that there's money in the checking account. So I think it's a combination of both those things that I've really grown up with. And I didn't realize it. So I was in design work and made myself art director at a Fortune 500 company. It was big deal. And I always would stay up late. We'd stay up to like 2:00 in the morning doing investor decks. And I'd have to just format this stuff, right? And I love the people I work with. I was working with these executives. I still talk to some of them today. And I remember like just thinking, how do these guys do this? This is crazy. They love these numbers and I don't understand it. I'm just trying to make them look pretty. And then year 2000 thereabouts, I started joining more of the business side, went during the whole banking.com, as I call it, space, and started realizing that there was a ton of creativity and ability to think outside the box around how you thought about the numbers, and how you thought about growing the numbers, and how you thought about measuring the numbers, and all of that, and piecing all that together was like art. And you had to figure out how to do it. And I think that really opened my eyes to this whole nother space of, wow, this is actually really cool. And I can use a lot of what my dad taught me and my math skills, right, through this whole process, while still balancing that with this creative thing of how do you get there? Because I think that's the interesting thing. Like, the numbers tell you the story, but how you get there and how you get to that end place, I think still has a lot of creativity to it, just around those decisions you make, right? I'm not a big believer that every decision is the right decision, but I think every decision you make is the right decision. And what I mean by that is there isn't really a wrong decision. There's a decision that needs to get made, and you make it based on what you have in front of you. And then you've got to believe and go with that decision. And I think that's really important. And I think especially in the real estate space, because you try and make a bet on what the market's doing. I don't think you're making the right bet.
Yeah, and that's actually interesting that you say that, because I was looking at your previous interviews and you said homes are unique products which people emotionally connect to. So real estate is not just numbers and transactions. So do you mind elaborating a little bit on like what you mean by an emotional connection?
Yeah, it crosses all across the board. So this is the best way I can think about the analogy, is thinking about the way that people think about their home is the same way they think about picking out clothes. They understand what it is, they understand what they like, and therefore they want something they feel comfortable in. And what surprised me in my journey with Revity and even at Picasa is what I realized is that even an investor, even when they say it's straight investment, still has an inherent belief of what they like, an inherent belief in what they believe in. And that crosses over into real estate in the fact when they go to buy an asset, even though they're never going to use it, they care about the paint color. And we've ran into this more than once, where the paint color mattered on an asset. Now, I don't believe that should matter. Mathematically, it shouldn't matter, but there's still this emotional component that people have. I would suggest you don't think about the paint color if you're buying an asset as an investment. Obviously, you don't want the pink because maybe people aren't going to stay in there, but you get my point. I think there is a lot of emotional in any type of real estate asset because they're so used to using it, because they're in a house every day. So they have connections, even if it's something in a different market.
Awesome. That's super interesting. So you mentioned, it's a little snippet, but you had said the two-sided organic growth trend will continue. We will begin to see it grow in actual investment class, not only with individuals, but also with larger and more sophisticated investors. So in summary, this is an industry that's coming out of the dark ages. Are we out of the dark ages yet? Is there a light at the end of the tunnel? Are we close? Are we just starting the journey? Do you mind giving a little light onto
we're very, very early in this life cycle. So if you look at assets, I mean, we look at this every day, right? Just from a numbers perspective. If you look at multifamily, you have about 65% penetrated by large institutional companies investing in the space. There's arguments you can make that down to 45, but it matters which way you look at it, but let's call it 65. If you look at long-term rent, so you look at the housing market in general around long-term rent and the possibility of long-term rent, you're talking about anywhere from 3 to 5%, right? Depends again how you look at it. Not very penetrated, right, compared to multifamily. But that's been around now for, call it 8 years, 10 years, where people have been really pushing hard on that with institutional capital. And still that's only their penetration. You look at short-term rentals, and it's nothing. Nobody's investing in this space. We're at the very beginning of this as a true investment asset class for large institutional buyers. And I think that's really exciting, because if you look at the multifamily or you look at the long-term rental space and see the trajectory that they had and how cap rates end up getting affected by that, right? Today, you go and buy a short-term rental asset, you're not really buying it on a cap rate multiple. You're buying it on what is the real estate value. That will change. And we're in the very early days of that. And I think it's a huge opportunity for people that are interested in getting the space. And now's a great time to get into it.
Okay, so that leads perfectly into my next question. So what would you recommend for somebody who, has been sitting on their hands a little bit, trying to stay on the sideline, waiting for the right time, and sort of needs a little bit of motivation or just advice for trying to get into the space a little?
Yeah, so it's interesting. I in real estate, I don't believe there's ever a wrong time. It's an asset class that's pretty amazing and pretty resilient. If you look at just history in general. I also think that now is a really good time to get into it, both with the inflation piece, because you can actually buy into the inflation protection, but also with short-term rentals specifically because of the cash flow that it provides. There's cash flow with this asset along with the appreciation you can get from the asset. That becomes a pretty powerful thing. So I think now is a great time to get in, but I would have told you that last year as well, and the year before that, and the year before that. Real estate is a great asset, has been, will continue to be, and short-term rental especially, I think it has huge opportunity.
Awesome. And then, so a little bit of a grander scale, like a macro perspective, what should we expect in the next 5 or even 10 years for the vacation rental
industry? Sophistication, maybe. I say that jokingly. We have a long ways to go. Like there's still huge ways to go from the standpoint of just becoming more professionalized, becoming more institutionalized. We are definitely seeing institutions starting to dip their toe into the water. That'll help. We will continue to see ADR growth, so and daily rate growth, and that's because of the professionalization of the space. As the space becomes more professionalized and sophisticated, it will be controlled less by the emotions and more by the data. I don't think you'll ever get the emotion all the way out, but we are a very emotional business now, very hospitality focused. Hospitality is a super important aspect of that, so I will never downplay that. But I think you also have to have the data and the numbers and the tools really to help you through this process. And that's where we're going to go in the next 5 years, is just continued sophistication and continued talent that comes in this space that helps progress it into a much more professional, institutional grade asset.
Mm-hmm. Awesome. Well, I was looking at Revity's LinkedIn page, and to speak a little bit more to the numbers, you guys had posted that you estimate that only 3 to 5% of short-term rentals are operating at their peak financial performance. And I'm going to repeat that, 3 to 5%. So what are some ways that people who own short-term rentals or are looking to get into the space should consider when trying to maximize their financial performance?
And I would say we're aggressive and kind with that 3 to 5%, to be perfectly honest with you. But yeah, so I think, if you're trying to think about this asset as an investment, there's 2 key pieces that really matter, and that's pricing and that's channels. So creating demand and pricing the asset right is the thing you should focus on the most. A lot of people focus on the hospitality aspect, and it is important. You get a 2-star rating, and that's going to hurt you, and that will hurt your bottom line. But the 2 most important by far is revenue management and channel optimization. So how many channels you can be on, how you manage those channels. And I always recommend that people look at professional managers as a manager for their assets because they can actually perform really well. People always get scared by their management fee, but if they produce 50% more revenue and charge you 30%, that's just a math equation that shows that you're better off.
Definitely. And then to touch a little bit onto that, are there any sort of like things that people should look out for when trying to vet through a property management company, or some things, red flags that they should be aware of, or green flags?
Yeah, I mean, you definitely want to understand their hospitality components by looking at the reviews. It's an easy one to do. But then you really want to understand how are they thinking about channel management, and how are they thinking about pricing, and how are they performing? We spent a lot of time on this, right? Just evaluating assets to say, are they performing or are they not? So some of our funds, right, that we work with, we will actually evaluate assets that they have under management and tell them, like, your manager's not doing a good job, we need to switch it. And that's a key piece that we look at. And it's really all about how are they managing the revenue, how are they managing that asset, and then last but not least is the hospitality aspect of how are they managing the reviews.
Cool, awesome. So now turning a little bit more to the advice aspect of things. So what advice would you give to young entrepreneurs, or just entrepreneurs in general, or anyone that might be listening to this who are looking to, start their own company or take that step into uncertainty?
Yeah, it's a huge step. I know all too well. I grew up in banking and then went and started a company. That was interesting. And I mean, it's a blast. You got to be able to enjoy the ups and downs. It's definitely a roller coaster. Even when you're just buying an asset in the real estate side, you will have ups and downs, but you have to persevere. Perseverance, I think, is what really wins every time. And that's always my recommendation to people I talk to all the time about career advice, etc. It's like persevere, figure out what you like, figure out what you enjoy, and figure out what you're good at. And try and emphasize those three things. If you can do all those three things, you will be successful. But you got to keep doing them sometimes, even when it's hard. I think on the short-term rental side, I think acquiring assets, the great thing about this space is you can acquire even at the lower end or the early entry stage perspective. You should do that. You can get really good returns. You don't have to buy the $1 million house to get really good returns. You can work your way up to that. And then you can go all the way up to what we call ego buys, where they buy these $3 million homes that are upside down. But that's cool because they can afford to do it. But you don't have to start there, and you don't want to start there. So I think making wise decisions, but understand that you can take small steps. That's huge. And that's what's great about the space is you can do it over time. You don't have to do it overnight. And that's a huge benefit, I think, in the space.
Awesome. Well, thank you for that. I wanted to learn a little bit more. So stepping away from the real estate, more back to a little bit more about you. Do you have any philosophies that maybe you've sort of learned along the way or live by to this day?
Career-wise, I'll talk a little bit about that. So let's start with that, and then I can talk more personal. But
Okay.
Career-wise, it's what I talked about earlier, which is make a decision. I've been in with a lot of folks over the years in banking, especially, where they get to a fork in the road and they will spend a ton of time at that fork in the road trying to decide which way they're going to go. I like to come to that fork in the road, make a decision, and go. Then I figure out it's the wrong path. I come back, they're still at the fork of the road, and I can go the right way. And I think it's really important in life. And I find that more enjoyable as well, by the way, because I'm not just stuck in decision fatigue, right? I think it's important to come to a fork, make a decision, and go down a path. And I think you can be very successful that way. Personally, I think I've learned through the years of just, I don't know how and I talked about my mom, how caring she is and how amazing and how much joy she brings. And I think that's super important. I think learning how to find joy while you're also caring about others can make your life much better. And I've been focusing that probably in the last couple of years. And I think COVID helped me really realize the importance of that. It's easy to get stuck on the hamster wheel, right? And I think it's really good to step back and remember how much, people matter, right? People matter in business. People matter in your personal life. Like, people are incredibly important to you as an individual and to your happiness. I think making people happy can make you happy. And so I think really bringing joy and finding ways to find joy and caring for others in that same way, I think can bring success, because that's, again, it feeds into business too. I don't think it goes outside of that. So.
Yeah, and that segues into, so talking a little bit more about Revity, what are some of your favorite things that you like to do with your team? It doesn't have to be like just work related. You have like happy hours, or like you do like events and stuff like that to really keep the energies high.
Yeah, it's funny because it ties into the space and not intentionally. But so my partner, she has some houses in Arizona. They're very nice, by the way, and rents them out as short terms. But we go there, and that's where our office is. I don't live there, so I go there quite frequently. But we go there as the team. We all stay in the house, and then we cook. It sounds crazy, and people are like, you do that with your work people? Well, this is work people. We're family. Like, we work very tightly, and that team, I talked about people being important to me. It's the same thing at Vacasa. I mean, there's still people that I talk to from my time at Vacasa that will be friends for life, right? Because we just created such a camaraderie, and that to me is super important, and brings, again, joy to my life, and I think to others too. So my favorite thing to do with my team is stay in an Airbnb. We cook. We even jump in the pool sometimes because, it's Arizona, so there's a pool. It's awesome. It's awesome. And it feels way less like a big work chore and much more like something enjoyable. And, half the time we're talking about work, the other half time we're not, and you don't know which half it is half the time. So it's a blast. We have a really good time, and that's probably the highlight. We've done a ton of other really fun things. But I would suggest that, and we go to conferences, the, short-term rental, IMN, short-term rental, we sponsor it. We stay in these great houses. We all crash there. And we just, the whole team just has a blast. And that probably brings the most joy to my face, is seeing the team work together.
Awesome. Well, that's really exciting and cool to hear. I'm glad you guys have that fun camaraderie. going on.
One of my this is the cool thing. So this is the team. This is when I get excited about team, right? And I talk a lot about team. So one of my second employee, Matt, he's amazing. He bought his first house, and it was a short-term rental in Joshua Tree, which is amazing, great, really cool house.
Nice.
Our head of marketing, she's now head of product or chief product officer. She went to when he bought it, right? They wanted to decorate it and stuff. She helped him, figure that out, and then went to his house and they sent us pictures of them drawing this beautiful mural because she's super talented on his wall. And that's what she took one of her weekends to go do that and go help him out. It was freaking amazing. Yeah. And I love that stuff.
That's cool. That's pretty unique. That not a lot of people would go out of their way just to do that for the love of it. And yeah, exactly. That's
made
cool.
They sent me pictures on the weekend, right? I'm like, that just made my day. Absolutely made my day.
That's cool. Okay. Well, this might actually be. I did want to end on this. I have a lot of questions. I dove really deep into your HSBC. I had questions about your variety of roles that you had there, your Capital One, TransUnion, all those different things. But since we're short on time, I do want to ask this one last question. Given that you're an expert in the short-term rental space, do you mind giving our listeners a little golden nugget of information? Totally okay if not, but just something I wanted to put out there.
Golden piece of information. I'm trying to think what that might be. I can tell you a quick trick when you're looking at assets. So one of the quick tricks is to drop the zero. And that's what it's got to rent for if you are looking for a decent cap rate. So if you go and buy a house for $500,000, you want it to rent for $50,000 a year. That's like the quickest trick we've learned. That's not always true. There's a ton of variables within that, but it's a good ballpark to get you an idea of what does this need to rent for, and quickly be able to move on if it doesn't work. I think the other thing that really drives me crazy is, and we do it too, right, at Revity, but the top 10 markets, the top 10 markets is about, averages. In this space, you should not be buying averages. You should be buying the right asset, which means you want to buy something above the average. And so top 10 markets to me is just isn't the way to go find what market you should be in. You should be looking at what are you trying to buy? Where is the spot? What is your price point? How much can you spend? And looking at it from your perspective, and then trying to find the best market. Because we see markets with cap rates that sit, in the 12, let's call it on the high side, all the way down to a 2, right? And then we'll see another market where its low is a 5 and its high is a 7. But guess what? They average out where the high with the 7 is the one that's the better market because it has on average has a 7 cap or whatever it might be, which is higher than the other market. But the other market has plenty of assets that are above that from a cap rate perspective. You just ruled it out because you used averages. So, in this space, if you're an early investor, be very cautious of using averages and try and look at support and data and teams that can help you look at what you want and what your criteria and strategy might be. I think that's the biggest tip I can give you because there are a ton of people, and I'm talking institutional capital that we work with, that look at averages. And it's the thing that drives me the craziest. This space should not be on averages. If you're coming in to invest, there's not enough of that professionally managed stuff. There's not enough of that institutional class yet for you to go buying averages. You should be buying the exception because there's a lot of them out there.
And I did want to touch on a little bit too, because I'm not sure if it was AirDNA or some other source that I was looking at, but they released an article that I was reading, and it was saying that the number one place for short-term rentals for 2023 was Anchorage, Alaska. I don't know if I read it and I was like, there's no way. I was like, that is crazy, but I don't know. In your eyes, what do you think are like the hidden gems or areas per se in the United
so
States?
I think, the thing about this space, right, is this an equation between house values, so what price is the house selling for, and what is the demand for the short-term rental and what can you rent it out for? So again, I always say it needs to be based on your buy box. How much can you spend? You can find places where $1 million houses make sense in a very saturated, quote unquote, vacation rental market, and they still work because they rent for a lot, right? But you can also find these nuggets in these markets that are very small, where housing prices are very, I'll call it suppressed or lower than some of the other markets. It's always a balance, right? In trying to find those right markets. I like some of these, smaller markets, but it's also harder to scale. So if you're looking to scale, those markets don't work. You got to make sure you have enough assets to buy. You rarely hear me talk about specific markets because it should be specific to you. What I say is the right market to buy is maybe I'm going to do that on averages, or I'm going to do that based on what I want, not based on you and your personal preferences. That said, I am very bullish on multifamily type assets and, kind of hotel style STRs. So, hotel style buildings that have full kitchens. I think that's where the space will continue to grow. There's a big exit from some of the urban markets during the pandemic. So there's increased demand now with low supply. So I do think there's some opportunities there. But again, multifamily takes some capital. Like you got to be able to get some capital to go buy some of those assets. So I'm bullish on that. Places like San Antonio are very interesting. Charlotte, those kind of places. But again, you got to have money to go in, and you got to make sure you find the right asset because those asset prices are going up. Guess what? Those go up in a month. You got to go to a different market. It doesn't work because it's both price and demand.
Awesome. Well, that was super insightful, and hopefully our listeners enjoy it as much as we did. But yeah, pretty much want to say thank you a lot, Colin, for taking the time to speak with Brendan and I. We loved it. We loved the insight, loved the enthusiasm, and loved learning a little bit more about you, who you are as a person. Because I was doing some interviews, I was like, I can't find anything out about Colin. Like, let me try to ask some questions about him. I want to learn about him. But yeah, so thank you from our end. We really do appreciate it, and we hope everyone listening enjoyed it as well too.
Thanks, Brendan.
Thank you. Yeah, super inspirational. Much appreciated.